mini section that has gone before, it's the same idea. We see the delta when the buyers start coming in. It's usually apparent. If I go down to a lower time frame, this is the 15-minute chart, but when I see an indication maybe delta has peaked out here and buying comes in, or maybe it peaked out here or here, and then it's starting to shift here. The usual that you can see in many videos of the earlier videos on the blog. So combining that with simple, either if you have market profile or if you just want to eyeball it like this, they both work. But we put it together with the confluence of the fib levels, and it is amazing how well it works in the euro. And I can show you so many examples. And then we can also look at projections. And what I do here is very simple. You take the first swing when a low is put in, vice versa for highs, obviously. And, well, anyway, I'm just throwing that out, and I believe it works as well. And you have the first swing, and you do the projection off of it. Strictly take the first swing and look at the 100%, the 122, and the 162 levels, and it will often stop at one or all of them, because if you look at this 100 even, it did stop right here at 37.10 for a very tradable retracement, because it went to 37.10 and pulled back to 86. So on the euro, we're talking 24 ticks. And in the euro, that's a good amount of money, because it's $300 a contract for a very half hour of trading or whatever. So the 122 and the 162 are higher probability, and you've got a level here in a very good pattern with a shooting star, and we might talk about how I'm using the candles as well. But this is just a textbook pattern of a shooting star followed by an attempt, which also was rejected with a long stem, and an inside reversal bar. If the bottom of that is broken after this 45 minutes of price action, and notice the perfect stochastic divergence and crossover, which takes place under this bar, that's also a great trade. Now that's early morning for Central. That would be at 5:45 Central Time, 6:45 Eastern Time. Maybe even most people aren't even up then. But, getting in here at, let's say, the latecomers, which I'm actually one of the people who come in late at around 8:30. I like to wait, see what the market's done, and then respond accordingly. And coming in at 8:30, you have now the retracement to the value area high. This is Friday's trading, of course. And where are you going to the left on the chart? You're not yet into the higher volume, which the last bulge was right here. You're not into this rotation from the prior day and the Tokyo session. And you are at a 62% retracement. So that's an example where you don't really have total confluence, but you are at a value area high with a 62%. You'd say, well, could I take a trade there? Well, if you went down to your smaller time frame, which we might do on a subsequent video, an example, you might find a way you could buy here. And again, if you were able to buy somewhere in this in the Fibonacci level at around, say, 53, it did rally up to 76. So that is 23 ticks. So once again, you're close to $300 potential on the trade, but nevertheless, a two-bar retracement which never took out the high of the low bar is a good sell pattern. And you got the bottom side of the 50 there, but basically we don't have an ideal entry yet. Now, entering here is possibly more feasible. You don't have stochastic. But now it's your second time through the 62%. You're looking at your profile here, and you've got a big bulge here now, and you might want to buy here. You've got a belt hold candlestick with a green bar, so buying somewhere in this subsequent bar or on the dip, if you could get close enough to this low here and buy it around 50, again, you know, it did go up to 81, which would have been 21 ticks. So you have a possible trade here, but the stochastic is actually bearish, and you don't have your perfect trade until you got down to the 78% level, which now made a double divergence, which was a stochastic crossover here. And now that went to the tick on the point of control. Now there is more to this, of course, obviously, because we're looking at hindsight, and some of the things I'm pointing out may not be convincing. You wouldn't know exactly when to pull the trigger, and that's where the smaller time frames come in. So we might look at that in future videos, but I just wanted to give you an update and show you that there are a lot of things you can do with the Euro futures, and I don't trade spot Forex. I really like the futures market. It's a fantastic day trading arena without any difference of spread, which to me, I don't want to touch with a 10-foot pole. I get all my trades without any slippage at all. Mercantile exchange, the Euro is a great day trading market, and you know, but for all, if there are those of you who want to trade the spot Forex, these things will work. You can get NinjaTrader to work with the spot Forex as well, and I think NinjaTrader is a great piece of software. Everything I'm doing here is, you know, what you can do on NinjaTrader. It's very easy to do the. I'll just give an example of the you can either do the right click, or you just pop up your fib extension tool in the pop-up menu. You draw from the low to the high of that swing, and so we'll look for something to hit the 1.62, and maybe then we could compare that with, say, a Fibonacci retracement, and I'm just doing all this totally hypothetical, but let's say we drew our 62%, and we'd be looking for some kind of a confluence. You have the equal swing would be right here, almost identical to the 62% to the 66% range. So the market would probably stall there. As it turns out, on Sunday it gapped it gapped up right over that level. So it was a real level, and but the buying was strong. So at any rate, the tools are very easy to work with, and another extension I like is to take the first swing and to pull back after the first swing and use that projection, and then your 162 and your 262 become very, very high probability levels. So there are a lot of things you can do in the context of market profile and volume, joining forces with Fibonacci, and we'll explore some of those if I get around to it and have the time to post some videos on the blog. So there you go. Enjoy, and check out the Euro. Check out the great day trading market it provides for us all.